Hello, and a very warm welcome to our esteemed panelists and our audience today for this session about a very contemporary and pertinent topic, fintechs in supporting sustainable finance and green investments. My name is Praveen Khanna, and on behalf of ScoreMe and Resurgent India, it will be my privilege to be your host today. We are joined today by an esteemed panel of members from sustainable finance, from agri-lending, from digital banking, from financial services industry, and it'll be our privilege to learn from their deep domain experience. Now, before I invite the panelists to share their views, just a few highlights on some of the aspects of green finance, and specifically from an India perspective. Green finance as a term refers to financial arrangements that are very specific to the use of projects that are environmentally sustainable or projects that adapt to the aspects of climate change. Various environment sustainable projects could include production of energies from renewable sources like solar, like wind, like biogas, areas around clean transportation, recycling of goods, efficient disposable conversion of energy, use of agri-related projects. These are various themes that are covered as a part of environmentally sustainable projects. Now, in order to meet the financing needs for these projects, various funding options exist. This could include syndicated lending. This could include traditional lending models, green bonds, capital market instruments, and of course, the emergence of new financial institutions, including green banks. Now, there are various public policy initiatives that have been made in the area of green finance. Some of the aspects around green finance which are included include e-sustainability disclosures by financial and non-financial companies. For instance, both stock exchanges in India, whether it is the Bombay Stock Exchange or the National Stock Exchange, are a part of this initiative and have separate publishing guidelines on ESG indices. Second is a directed and a more concessional lending that is practiced in various countries, including India. Third are the micro and macro prudential regulations of both financial and non-financial institutions. For instance, Brazil has recommended banks to outline their risk assessment methods and exposure to social environmental damages in their annual reports since 2017. Fourth is the establishment of green financial institutions. For instance, there is a UK Green Bank, which is a GBP 3 billion entity that's fully owned by UK government and was established in the year 2012. Now, if I talk about specific initiatives from an India policy perspective, India started emphasizing on green finance as early as in 2007. In 2007, the Reserve Bank of India issued a notification on corporate social responsibility, sustainable development, and non-financial reporting. In 2008, the National Action Plan on Climate Change was formulated in India. The Climate Change Finance Unit, CCFU, was formed in 2011 within the Ministry of Finance in India. SEBI then made it mandatory for the top 100 listed companies based on market cap at BSE and NSE to publish annual business responsibility reports since 2012. In addition, the Ministry of Corporate Affairs imposed mandatory reporting guidelines on the progress of CSR under Companies Act in 2013. On sustainable development goals, we are very well aware of these measures that India has committed to. India has made commitments under the 2015 Paris Agreement to reduce greenhouse emission and to achieve 40% of installed electric power capacity from non-fossil fuels. Government of India is also subsidizing solar panels up to 30%, and in some states, the subsidy is available up to 70%. There is an increased move towards electric vehicles. The government has also brought in the production-linked incentive scheme for manufacturing high-efficiency modules in the area of renewable energy, and specifically for MSME lending. The small renewable energy sector has been brought under the PLI priority sector lending scheme since 2015. There is also a suggestion recently to bring in electric vehicles and green hydrogen under the priority sector lending by banks. Recently, the Prime Minister Narendra Modi has proposed a Panchamitra five-fold strategy, wherein India will get non-fossil fuel energy capacity from 500 to 500 gigawatts by 2030. India will meet 50% of the energy requirements till 2030 with renewable energy. India will reduce its projected carbon emissions by 1 billion tons by 2030. And India will reduce the carbon intensity of its economy by 45% by 2030. And finally, to achieve net zero goals by 2070. Recently, Finance Minister Nirmala Sitharaman has also made various provisions on green financing. Green growth has been highlighted as one of the 7 areas of priority or Saptarishi to guide India into the Amrit Kal, as per FM Sitharaman. Of course, challenges do exist. The cost of issuing green bonds, borrowing costs are still higher on the green financing. What roles can be played towards incentivizing EVs? How can collections be made more profitable from an electric vehicle standpoint? So all of these themes are very, very important from an India standpoint. So how does India achieve Panchamitra via green finance? How can lending, regulators, and digital lending be implemented in these areas? What role can fintechs and account aggregators play in this segment? How do fintechs drive innovation in sustainable finance and green finance? These are some of the topics that my esteemed panelists will be discussing today. First up, I'd like to invite Mr. Kshitij Kothialia. He's the VP and Head Strategy at Resha Mandi. Kshitij is a young and dynamic leader at Resha Mandi who comes with 7 years of rich experience in finance and strategy. He's responsible for various crucial aspects of the company's operations. This includes overseeing new expansion projects, internal cost management, cash flow efficiency, operational efficiency. He's currently expanding the company's wool and jute verticals and adding traceability to the supply chain. Over to you, Kshitij.
Thanks, Praveen. Thank you so much for a kind introduction. And thank you, everybody, for attending this very, very important conference. Just adding on to Praveen, most of my job at Resha Mandi is across new sectors that we look at. So when I joined Resha Mandi, I set up their agri practice, which today has almost 75,000 sericulture farmers, which are silk farmers and cotton farmers, where we introduced new forms of lending and insurance, which is backed by our IoT. We can touch upon that later. Post that, we went on to looking at the circular economy, where any kind of waste that we were creating in our supply chain was being sort of reutilized into different areas apart from textiles. So that's where I think, and I can talk about it later, about pupa and how we use silk extracts for the pharma industry as well. And today, as we sort of stand, I'm head of strategy. One of my most major projects that we are working on is building traceability in the supply chain across all natural fibers. As a way to sort of quickly introduce Resha Mandi, we started in about 2020 with the idea of digitizing the whole natural fiber supply chain. We started with silk. It was a huge TAM and an untapped, fragmented market. But today, and the idea of Resha Mandi is to do end-to-end supply chain from your farmer all the way to your retailer. We are a pure B2B platform. The idea here is we want to add a lot more transparency, trust, and quality in the kind of products that we're sort of dealing in, reduce dependency on man-made fibers, and focus a lot more on natural fibers. That's what we do. And apart from that, I think everything related with debt, equity, and any sort of financing we have to do at the stakeholder level sort of comes under my bucket. Just to throw you why we look at why sustainability is super important for us. Just to throw some high level numbers that we sort of crunch out also is about. So everybody knows textile will contribute about 2 to 3% to India's overall GDP. But what we should also know is that textile at a global level will contribute to about 6 to 8% of the whole global carbon emissions, right? We employ close to about 100 million folks, both directly and indirectly in the textile sector of India. And we truly believe that there are lots of innovations that can be done, not only maybe at the manufacturing side, but also at the agri side, that require a lot of handholding for us to be successful, right? To become more sustainable. As we sort of progress, when we look at export markets, becoming sustainable, becoming transparent, and becoming traceable are becoming the need of the hours. There is a lot of charge taken by the EU to make sure that any supplier that you work with needs to make sure that they are compliant with a lot of regulations there. That's something that we have started to work upon. And we truly believe, I mean, this was a recent report that we were reading. And just quoting from BCG's report, about $20 to $23 billion of financing will be required in the textile level for us to achieve our SDG goals, right? Happy to talk about more about Asia Mandi as we sort of progress, yeah. But thank you so much.
Oh, thank you so much, Shatish, for those opening remarks. And I will definitely circle back to you on some of those very, very important themes around traceability, around the use of IoT, which I'm very, very interested in, and really how are you meeting those sustainability goals, and also what kind of financing options you're using, both for through the entire supply chain. That'll be of very, very specific interest. So definitely would love to circle back, on all those themes. Next up, I'd like to invite Mr. Madhur Jain. He's the co-founder and CEO at Varaha, a global climate tech venture, which works with smallholder farmers to generate carbon credits from farms. Previously, he spent close to 10 years building scalable digital products and businesses for agriculture sector across the value chain. He also worked with oil palm division during his time at Godrej and collaborated with the Coffee Board of India to develop digital agri-advisory solutions for coffee farmers. Madhur is an alumni of IIM Ahmedabad and also holds a bachelor's degree in agricultural engineering. Over to you, Madhur.
Yeah, thanks, Praveen. And good to meet you, everyone. So as I mentioned earlier, Praveen, I'm one of the co-founders and CEO at Varaha. And just to speak a little bit more about Varaha, and I think the topic that we are discussing today, I think they fit in really well. So as an organization, what we essentially do is that we look at nature as the entire landscape. And when I say nature, it includes mainly agricultural ecosystem, but also agroforestry, because agroforestry is also sort of done and implemented over agricultural farms in a lot of ways, right? And so the idea is that agriculture contributes to almost 24% of the total global emission, agriculture and allied activities, which is almost double the emissions of the total vehicles put together on the roads that we have, right? And so it's a significant impact, which is caused by a very important industry. And that is why I think the narrative is that agriculture is actually the problem when it comes to climate change. And now at Varaha, we are trying to change that narrative because agriculture can also be a solution. And the reason being that agriculture is practiced on almost 3.5 billion hectares of land globally. And when I say land, it's basically the soil, which is creating that enabling environment to do farming in the first place. And if done in a regenerative fashion or a sustainable fashion while not disturbing the underlying ecosystem too much, act as a carbon sink by removing the carbon from the atmosphere and putting it back into the soil, right? And so in theory, if done properly, 3.5 billion hectares can be sequestered somewhere around 7 to 10 billion tons of carbon every year. And this is where Varaha comes into being, that we are mainly focused upon smallholder farmers. And our targeted geographies are both Asia and Africa. And we work with these farmers and some selected value chains to help farmers transition to these regenerative practices while working with high quality partners on the ground. That's one. And the second critical part of it is that how to validate the presence of these practices, which are sustainable in nature, and then measuring the emission reductions which are happening as a result, and also quantifying the soil organic carbon which is being sequestered into the soil. And that, after a fully third-party audit process, gets converted into carbon offsets, which can be used by companies to turn carbon neutral, to reduce their impact on the environment, etc., etc. And the best part of the business is that most of the income, and to quantify it, almost 70% of the income goes back to these smallholder farmers from the carbon credits, right? So it's basically creating an alternate income stream as well for them. And so we believe carbon markets become a really important mechanism to really drive sustainability and creating a new carbon financing mechanism, which has huge societal benefits for the smallholder population while being environmentally positive as well. Thank you. Happy to chat more.
No,
As we go along.
absolutely. I would love to come back to you and really understand what are the opportunities and both the challenges with these smallholder farmers, especially from an India perspective. How do you validate those practices, at the ground level? I would love to really understand there. And how can lending and financing be implemented and those streams of finance be implemented for the small farmers. So would love to circle back to you, on those themes. But before that, let me invite Mr. Timanna Gowda. He's the founder and CEO and MD at What's Loan. Timanna is a mortgage and retail banker with more than 20 years of experience, specialized in consumer loans. He has worked with Axis Bank in the retail consumer loans segment across all functions for nearly a decade, at business, credit, product, at regional, zonal, and national levels. Prior to this, he worked in the investment banking segment, in corporate banking, in consumer banking, and also on housing loans. Over to you, Timanna.
Thank you, Praveen. Yeah, great to hear from Resham Mandi on they're going back to the basic fiber, the natural fiber, moving from the synthetic fiber. The mankind knows that the natural fibers are the best, sustainable, healthy, and all of that. And followed by Madhur Jain's, how is he going back to the agriculture, sustainable agriculture, measurement, all of that. But when I look at India, around 2009, when they created the digital financial identity, or a digital identity Aadhaar, and followed by 2014 to 17, whatever has happened, we're already on the, if you connect the Fintech, digital finance, the ease of access to financial services for living and the livelihood, that is more important. I'm going to talk about how the digital financial services, which is even the World Bank, D for ID, you would have heard about how they are, the India is covered, like they say, more than 2 billion people don't have an identity and don't have a digital financial identity. 1 billion people of the 7 billion don't have an identity at all. We have covered that first. We gave that power back to the last person in India, saying that you are identifiable. We are moving from there to, if you don't identify the person, assets, transactions, and all of that, you could none of these green sustainable initiatives, because the inputs and outcomes cannot be measured. So today, talking about the green finance, or what fintech can do for green finance, let me talk about digital finance. Where we have reduced the impact. Access to finance is completely digital. Maybe we have reduced the paperwork completely. We have reduced the visit to the branches. It's become paperless, presenceless, branchless. What was taking like 8 to 10 weeks is taking few minutes now. If you have done that, then Madhur will be able to capture. First is living. We cannot go the Sri Lanka way, pushing some sustainable ways down the road and kill the country. We have to live with the way they live, the way earn their livelihoods. After that, we can, once we meet the basic requirements. Today, the Prime Minister, the various policies from 2020, they have called out, please saturate 120 million PM Kisan beneficiaries with some kind of a loan. The easiest product in that has been the Kisan credit card. It's called one of the best products, one of the largest delivered product in the world. 17 crore people have benefited in the last, from 1998. And it was physical, and it was taking anywhere between 1 month to 3 months. If that can be reduced to the digital access to finance, that is the first problem solved. And then you can demand a better behaviors, sustainable agriculture, and like consumer behaviors. And then we go to the transport. How do we finance the transport? What are the today we like I was talking last few weeks, I've been talking about kind of agri fintech. Today I thought about can we launch green fintech? Can we put a green interest rate? Why should there should not be a green interest rate? If you're going for a green product, green behavior, green services, can there be, okay, we only spoke about subsidies, capital subsidies and all that, incentives and all that. even reducing the rate of interest to access a two-wheeler or a green utility vehicle or a car. It could be, like today, even the banks are worried about, is it worth repossession? Is it worth the money? Like is it registrable? Those are the issues which are, if there is a non-registrable, there has to be a registry on the blockchain. These are the kind of things we have to look at to get the behavior going on the consumer side, farmer side, and even the business side. If the businesses have to replace their ACs or power with a solar, powered kind of office, you have to really imbibe. You cannot talk about 1,000 companies that who are under SEBI, who are in the top, top capital kind of companies. Only they will be looking at for, by the banks to measure it. You should go to the last businesses, last family, and the last consumer to see how do we change the behavior. Because India is historically, socially, culturally, whatever we do is it's sustainable. I don't carry a plastic cup. I carry a steel tumbler, for generation. All the plates that we use are maybe steel, starting with steel. We have moved to glass and ceramic today, right? But we don't use any disposable things. That behavior is already there. How do you go back to that? I've heard about, like Mauritius has started a green fintech hub for the whole of Africa. They've done it a few years back already. They want to do innovations, and we should bring something like that in India. And it's Mumbai, Bangalore, Delhi, anywhere. We should pick that up and go forward. This is my thoughts on the green finance. Is start with the digital finance first. That rest all will follow. Thank you.
Perfect. Thank you for sharing your views, Tamanna. And I think the three themes that I captured were starting with digital finance, then moving towards perhaps green rates. That is a very, very important point. And then how about building an overall green fintech hub, like what's been done at Mauritius. So I think those will be very, very important themes from our standpoint. I think that's a perfect point to bring back Kshitij. I would love to understand your perspective on the entire supply chain, how you're implementing IoT, what are the challenges on the financing side for the sericulture farms. I would love to hear your views on that.
Yeah, so let me give you a little bit of brief of, if I just delve into a simple textile supply chain and just natural fibers, right? Not man-made fibers. There's a farmer, there's a yarn manufacturer, there's a fabric manufacturer, and then the retailer, and then the consumer, right? Now, when we looked at the supply chain, we saw most players going at the last fabric to retailer leg. What we thought is that if you actually want to solve for quality, we have to go all the way back to the farmer, right? Which is how we started the silk business as well. Today, as on date, we will have close to 75,000 silk farmers with us who are working actively with us. And what's happened is we have two kind of IoT devices, right, that sort of help the farmer. Now, where Mr. Tamanna had added a lot of very, very valuable points, we had a slightly different objective because, of course, we were not fintech first, right? Fintech has always acted as an enablement for Isha Mandi. I mean, just as from a credit standpoint, if you look at textile, you look at any P&L for any textile holder, almost 70% of the raw material of the P&L is their raw material cost, which is what they need money for. So we thought, let's first try and solve for their problems, right? We tried to solve for raw material problems across the whole supply chain. And what we realized is at the farm leg, when we were doing input and output both. So if the farmer would come to us to come to one of our centers, we have about 50 odd centers covering 400 cities. You could come in, buy input from us and also sell your output to us, right? Now there are two kinds of technologies that were involved here. On the input side, when you're doing your farming, when you're doing sericulture farming, we implemented our IoT devices, which are our own proprietary tech that we've built in-house. We saw that IoT actually led to an increase of about 30% of their overall output. So if an output farmer was creating 100 kgs of output, he's now creating 130 kgs, right? That was super helpful for them to also adopt to make sure that, you have to realize that IoT adoption is not as easy. You have to give it time, you have to show results, and then you have to replicate the model across different clusters. Once we knew that the model was successful, and we now had to scale it, we started linking our IoT devices with insurances. So we went back to the Agriculture Insurance Company of India and we said, hey, we have these IoT devices, but but what we've seen is that farmers who don't have these IoT devices face a lot of crop failures. So we created with, of course, AIC, we created India's first sericulture insurance as well, which is exclusively distributed by Resha Mandi today. What it does is it has helped us in penetrating different geographies for our IoT. This is backed by all the different kinds of advisories that we give. And if there is a crop failure because of natural reasons, it's a parametric insurance. As soon as there is any sort of crop failure that happens there, the farmer is compensated directly, even without filing for claims, because those parameters have been set by us, right? We've seen that almost close to 1,000 farmers have benefited in a small pilot that we ran. And now this year we're looking to scale it up completely, right? And the idea is we will take this forward as we progress. Now, that was one problem that we saw, right, on the IoT side. What we've also seen and what we're also looking to do is once the farmer, so I'll talk a little bit about what we do on the deep tier financing side. Essentially, what we do is, because we have access and visibility throughout the supply chain till the farm end, we exactly know how much output is required or how much input is required, and or what kind of wastage will be generated at each level. And because we're able to trace this supply chain all the way back to the farm, we're able to essentially ensure, okay, normally when you look at retailers, but I'm talking about textile retailers, most of them have some sort of bank financing or NBFC financing or unorganized financing, right? But when you go to the fabric leg or when you go to the yarn leg, there are lots of gaps. It's not that these people cannot get financing, it's just access to financing for them maybe slightly harder. So what we do is, because we know how much output they're producing and what kind of input they would need, we are actually back channeling the demand from, for example, if I created this shirt, I can back channel this all the way to the yarn manufacturer or the farmer and tell them this is the kind of financing you would need, and we create personalized solutions. Now, we're not an NBFC, but we've got platform plays with ourselves where we've partnered with certain NBFCs to make sure that these people get access to this kind of finance, because we have to realize that for all kinds of changes that we want to bring in the fashions, in the textile supply chain, right, require some sort of funding support. Right now, there are not a lot of players. In fact, in the 2.5 years of existence of Resha Mandi, we still don't have a direct competitor that we say we are, matching them at a global level. Not only India, across globally, we don't have a competitor, right? So the idea is, so a lot of these initiatives that are taken by Resha Mandi are first of its kind, be it on the insurance-linked IoTs, be it on financing for your deep tier supply chains, helping them on the input and output side, right? There's a lot of work that needs to be done here. What we've also realized, Praveen, here is your natural fiber supply chains can become zero waste supply chains. It's just that today, processes are not defined well enough across the whole supply chain to manage the wastage. I'll give you a very, very simple example, right? So everybody's seen a silkworm, right? Those white small balls. Your silkworm, as soon as you use silkworm for rearing, which is to create yarn, you essentially kill the silkworm, right? And when you use the cocoon for rearing, what's left is that pupa, the silkworm inside, right? That's left over. Now that in itself is normally thrown away in millions and millions of tons of whatever silk that we are producing across all the yarn manufacturers. What we did is we created a simple process where we started collecting all of that waste. We identified that pupa had 85% protein, which means it could be used for fisheries, for fishery farms, for poultry farms, and it is also a delicacy across China, South Korea, right? And it can also be used across pharma, because a lot of protein can be extracted out of this. We today, because of simple process setting and just hand-holding our yarn manufacturers, we started collecting all of that waste. And today we have created it into almost a 60 to 70 crore business annually, right? And this is just waste which was thrown away. Our intention is, can we sort of replicate similar things across yarn, across fabric? Because if a shirt is created for about 2.5 meters, almost 1.5 meters of that same cloth is wasted in your cut make trims. What we want, so that's another larger problem to solve for, right? What we're also solving for is once the product is made and you go to any other retailer, go to any nook and corner, go to any mom and pop shop, go and talk to them. They will say 30% of their current inventory is wasted, is because there is no buyer for it. Now, because we have our own design team that throws out design forecasts for, they're so granular. They'll be for an Uttar Pradesh market, they'll be for a Delhi market, for a Karnataka market, for any other market, right? They will try and capture colors, palettes, what works, what doesn't work. We essentially know what works in what micro segments within India. Now that helps us tell the retailer, okay, if you have red sarees, I'm giving you a very simple example. If you have red sarees today, you are not being able to sell it. It's going to be waste for you. Why don't you give it to us? We have a retailer base of almost 1,000 in Karnataka, and the red sarees is something that is working there. So essentially this interoperability between retailers that we are building right now essentially reduces their wastage from almost 30% to what we've seen is anywhere between 5 and 10%. And that's where sustainability, for us, sustainability plays a big role, right? The only advantage that I feel that Resha Mandi today has maybe over other textile manufacturers globally is the interconnection of all of these supply chains. Now, if you go to any consumer, maybe it may not be as prevalent in India today, but if you go across consumers across the world, you will see that everybody wants to realize where the source came from, right? Where is this cloth made from? What farm? What processes were used? How much wastage was done, right? We are able, tracing it is the most simplest part. Is the most simplest part. What we're working on is to make sure at every leg, if there is a trader or a manufacturer or a farmer or anybody involved, are they compliant enough to make sure that these goods can be serviced towards countries, not only India, but outside India? These are regulations that have been driven and are becoming mandated from this year across EU and other countries. India may, of course, learn from there and bring in their own regulations. But we are working so that we make sure that our farmers or our stakeholders, about 130,000 of them, are being able to solve not only for India, but for the global economy. That's where we're heading.
Perfect. No, some very, very interesting points that you've made, Kshitij. And I love the idea of optimizing and finding solutions across the supply chain. I mean, just that simple theme of reusing and recycling the silkworm, that it can be used across different countries. I mean, it also creates an additional source of income, I'm sure, for the farmers.
Absolutely does. And Praveen, what we have to realize is today we may be a single corporate that's working upon it, right? But we will need to hold hands together to make sure that there are customized financial solutions for farmers that may want to run a lot of their own technologies for themselves, right? There are these small scalable solutions that are available. Sometimes we get access to them and we run pilots with them as well, right? But the idea is most of these solutions don't get implemented because there is an initial amount of money that is involved. Unless and until you're able to prove your success, people don't replicate it very easily, right? We're a larger company of about 600 people, so we are willing to take these risky bets, right? We need to essentially ensure that whenever we talk about, finance is the base for everything. Unless and until you don't have access to capital, taking those risks is out of the question, right? Innovating is out of the question right now because we have access to capital. We are doing this, but I think we are far away from where we want to be in terms of where we want to reach in terms of textile. Because slowly and steadily, as you understand, India will become the global manufacturing hub. And while what we have to realize is, we talk about subsidies. Most of the subsidies on the silk farmer side, on the jute farmer side, or on the cotton farmer sides are being receded back, right? They are not like there is no MSP concept here, right? But what's very interesting, I don't know if people have realized this, most silk farmers have an annual turnover of anywhere between 6 to 12 lakhs, which means all of my farmers are not marginalized. Most of them have a smartphone. Most of them will drive a car or a motorbike and will have owned land, right? How we leverage them, how we provide financing solutions to them, so that we are able to, it can be goal-based, it can be output-based, right? That's something that we are also exploring right now. but that becomes very important for them to ensure that they are following the best practices, right? And for them to be able to move away from their current scenario, they will need a timeline. Change does not happen over a day. You will need to give them time to sort of improve their solutions, because when I see where China is in terms of silk rearing, I think we're miles. Everything is mechanized. We're still used to using our hands to rear silkworms, right? In China, there are factories that do end-to-end silk cultivation from your silkworm that is producing the yarn from that cocoon all the way till the final silk shirt or any other output is made.
So
right?
clearly that requires funding. That requires funding. And therefore there is a need for finance and innovative solutions on lending around that.
Correct.
Tamanna, you want to comment on this? Some innovative solutions on agri funding, on agri finance.
Yeah, I'll pick that up. I think, Akshitish, I think you don't have to worry. This is music to the ears of the government and the public sector banks, Gramina banks, and 65,000 packs are out there to distribute money. There are big balance sheet banks, and FM has called out that 20 trillion, 20 lakh crore is mandated. It is a distribution business. It is not a credit business anymore. It has to be given to the farmer, and 120 million farmers, including marginal, small, and all the your self-rearing farmers have been covered very well. It is just that, there is money available, and there is a borrower, there is a lender. That's where the fintech comes in. I have studied this market for last 3 years, and I've been trying to talk to Resham Mandi also sometimes, saying that, okay, everything that you do, whether it's a product or service or anything which you want to change the behavior, the first thing the farmer will pop up, where is the money? I need the money. You want to give me an equipment? Give me an equipment, fund it. You want to add a service where I have to pay for it? Where is the money? That simplest money is available under Kisan Credit Card. Like up to 1.6 lakhs, non-mortgageable. Just what are you doing with it? And hypothecate the stocks of the crop or whatever, what are you growing, and including dairy and fisheries, poultry, all of that. 1.6 lakh to 3 lakh is called, mandated, where interest subvention is available by the state and central government. Your net rate is 4%, whereas you might be paying 4% per month to the mandis. You will get 4% net rate for the per annum simple rate, right? That achievement of that target is 70-80%, and it's a headache for the government. If there is a headache for the government, headache for you, but what's happening? The fintechs have to money of 1 lakh average ticket size of say 70-80 million farmers was costing the bank at anywhere between 3,000 to 5,000 rupees per file. That means the product makes the loss at the operational level, not at the interest level or credit cost level, right? We said, okay, I think Praveen is aware of this segment. We said we can do it at 1/10 of the cost. It doesn't take 3 weeks, 5 weeks, or three months. It takes few minutes to do that. How did you do that? We brought the whole thing digital. We didn't digitize the processes. We went digital direct. Because today, what is the infra that is available, made available by the government, whether it's a KYC, bank, your bureau access, your land record access, satellite data access, everything can be done in 2-3 minutes at the 1/10 of the cost, 1/20th of the cost, right? So this is readily available, and it's just that you have to access it. You should not be, just going to the NBFC. That'll add up another 10-12% arbitrage for risk taking. NBFCs are not good risk takers. For risk taking, you need two things. One is a mandate, like government mandate. Second is you need a big balance sheet. If you don't have the balance sheet, you can't take the risk. To take a risk, you have to broad base because there are always a 5-10% of operational default which will happen, and write-offs of 2-3% will happen. The big balance sheet banks, like 12 public sector banks, 45 Gramina banks, and 65,000 cooperatives, packs, will definitely step in. What is needed is fintech technology to bring the books and bring the borrower together. And agri-tech companies should join the fintechs and the banks. That's why I call it as agri-fintech. Now then there is a need for agri-fintech as well as green finance or green fintech.
Perfect, perfect. And absolutely, you're right. That is music to our ears because we've got all the tools and the KYC options, the options to access bank statements. All of that is available today at the click of a button. All you need to do is bring it together on a fintech platform, connect with players like yourself, bring in the banks, incentivize the two parties, and that lending supply chain can be built very, very well.
As Kritish said, like if it is a farmer of this quality, 6 to 12 lakhs annual income, he's got a bike, he's got a smartphone, he's got a balance in the bank account, little balance in the bank account. He can also engage an IoT if it can be financed and if it enhances the productivity, measurability, whatever. I think it's a good place to go. And private banks are very well, focused on this kind of where their problem is, visibility of what is happening with the money and who is engaging with the farmer. If Ration Mandi kind of agri-techs are engaging with the farmers, the money is readily available and the fintechs can work for you.
Perfect. Madhur, you want to chime in on validation of practices across smallholder farmers, and what are the differences between Asia and Africa, and specifically from an India perspective?
Sure, Praveen. So I think if we start with what's the difference between the two continents, and if we compare India and Kenya more specifically, so see, if you look at regenerative ag practices and climate finance, I think as a concept, this is something which has been propagated in India a lot more, right? Because the Indian government and the entire extension system has also been focusing upon this topic for more than a decade now, because our soil health quality is also deteriorating drastically, right? And if you see what the differences in the soil organic carbon content and the soil health overall in the last 2.5, 3 decades, I mean, it's drastically gone down, right? So Indian government has been advocating not so much from the climate perspective so far, but more from the soil health perspective and the soil fertility and the food security at large. And so when you go to the farmers and talk about regenerative agricultural practices or these natural farming, sustainable farming practices, I think it's easier to sort of connect the dots for them, at least in some of the geographies in India, right? But the concept happens to be like pretty novel when we look at East Africa. That's one. And also, I think agriculture has not become so intensive in nature in these countries, in African countries, that you need to go back to regenerative agriculture, to be honest, right? They are yet to reach the optimum quantity of fertilizer that needs to be put in, etc., etc. And so I think the kind of interventions that we see from climate finance and soil carbon sequestration are quite different between the two continents, right? But I think the potential remains the same. Interventions might be different, but the potential is humongous in both the countries and the continents at large. And in terms of validation of these practices, so we use different methods for that. So in some cases, it's IoT-based systems, which helps us monitor that how much water, etc., has been put up into that farm or in that particular area. That's one parameter. And then for a lot of the other practices, we use remote sensing-based algorithms. And for that, we have an in-house team which develops them. And so that is how the validation is done for different set of regenerative practices, which are of interest to us at this point in time, and for the crops that we are most keen on to start with.
Understood.
Yeah.
Some very. So how? A quick question. How easy or difficult is it to implement technology in the farming segment? Are they easy adoption rates there, or what are the challenges that you face?
Yeah, so see, definitely it's challenging given anything new which gets introduced in an ecosystem, right? And especially in a smallholder ecosystem, definitely challenging. Not one is the education part of it, like literally sort of creating an agency as to why one should do it in the first place without harming their crop yields, because I think that's what matters the most. So I think building the education, doing the demonstration and showing success that it doesn't harm their primary business is the first part, right? So really encouraging them and making them confident about following these practices. And the second one is that how do you create linkages for providing the right set of machineries to do those practices on the ground, providing the right set of input. So how do you create those linkages on the market side? That's the second one. And then the third part is that if someone is willing to sort of try out some of these new practices, new machineries and mechanisms, how do you make the financing available for that? Right. So I think in a lot of ways, when we talk about green bonds, climate financing, carbon credits, right? So they become a really critical element or instrument to catalyze and improve farming practices, which are much more sustainable in nature. Because it's definitely challenging, and considering the scale at which India operates, right? So there is a huge need of making green capital at reduced or subsidized rates, making that available, and then helping farmers transition to these practices rather than just education or extension.
Understood. Understood. I'm conscious of time. I think we have about 10 or more minutes left. I'd like to have some closing comments, and then we can do some questions as well. Kshitij, you want to start off first with any closing thoughts from your perspective?
No, I mean, I think there's a lot of, I think everybody's working on a lot of things. I think our always goal has been, we have to make sure, like, as Mother was also saying, there are multiple solutions that are available. We have to just make sure that they are adoptable. They are replicable, and they make sense from where they are being able to capture some output. And you have to realize that to be able to capture any sort of change management across any field, right, you have to truly go into the roots and make sure that you are solving the same problem that they want to solve for, right? I mean, there will be takers that will adopt with you. And like in Resha Mandi, we say early success is very important, right? Try and be right the first time. But if but even if you're wrong, do learn from your mistakes and make sure you don't repeat them again, right? I mean, so constantly innovating to make sure that we bring about these changes. And the idea is, guys, if we don't do it, you never know who will, right? So our idea is always take initiative. We may always not have the right answer, which is why we have partnerships, right? We would love to partner. I mean, Madhur is doing some fantastic work. Thimana said, I would love to talk to him on a one-on-one basis to understand what we can do at the farmer leg. Carbon credit is something that, by the way, Madhur, we've been trying to, sort of understand. We're not experts there. I mean, that was something that was on my plate as well. Would love to explore that with you. And yeah, I mean, keep collaborating. I mean, that's I think if all of us put our minds together, I think we can come up with very, very innovative solutions on both on your sustainable sides.
Madhur, thoughts from your side on carbon credits and other options available?
Yeah, so I think, Praveena, my learning so far of working in the agriculture sector so far has been that one can't do everything given the complexities involved. And so I think one takeaway that I always leave everyone with is the collaboration part, which I think Kshitij also touched upon. That I see huge amount of synergies given what Kshitij just explained, that there's a lot of work happening on the circular economy side, a lot of work on the IoT systems, data collection, and building those traceable elements into the value chain, right? So if that data is already intact, we can easily build a carbon project on top of it if farmers are already following certain sustainable practices, right? And create an alternate income stream for them. So I think there are direct synergies over there. So Kshitij would love to chat more for sure about it. And similarly with Timanna, we've already been chatting, for a few weeks now, that they're already providing loans to farmers, right? They have access to such a large sum of farmer through their platform. Then how can we work with banks who have increased appetite for ESG related matters now, right? Given the policy related matters which are coming to the forefront. And so how can we work with banks and their farmers and startups like Watchlion, which is being run by Timanna, to create more and more synergies and bring these farmers onto the platform and rapidly increase and catalyze the carbon credit sector and the carbon markets for the farmers. So I think collaboration across the board in different ways, shapes, and manners would be the way forward for us, and I think for the sector also at large.
Perfect. Collaboration absolutely is the way forward in any segment of life, and clearly, definitely from a climate finance, from an agri funding perspective. I saw a very interesting case on the use of IoTs in electric vehicles today. So I was speaking to some lenders specifically on the EV financing side. So they're using IoTs to track the usage, the charging of the electric vehicles. So they're using it from a collection standpoint. So let's say they give a loan to a small entrepreneur or a self-employed person to buy an electric vehicle. So the IoTs can then be used to track the usage, and then also to track if the vehicle is actually being charged or not. And that can help on the NPA side, and then that can actually help them in tracking on the collections. So very interesting use case that I was discussing with someone today on the EV financing side. Tamanna, closing thoughts from your perspective?
Yeah, okay. So we cannot push the COP 27 or green ESGs onto the farmer or the last user, right? You have to show him what is in it for him. He is given the food security to the nation, but he doesn't have the income security. How does it benefit him? I was talking to Madhur and said, how much can we subsidize the interest further, what he's paying to the bank, by doing sustainable farming, for example? Can I put it back on his balance sheet? What is his balance sheet? Is it credit to his account? Maybe 100 rupees, 300 rupees. Can we credit to his account? The better behaviors have to be incentivized, and people have to be told, if you do this, you will benefit like this. And that has to be a cycle of a crop, cycle of a farming activity. If you do your dairy this way, you will get benefited. If you grow your sericulture this way, you will be benefited. And you will have to link it back to the banks. Banks are the other bosses who are sitting there who can induce that behavior on their thing. We are trying to bring that back to the bank and tell them, your farmers are your farmers. You are giving the money, end use of that money, and the better behaviors, how can they benefit? This taking it grounds up through the Fintech, Agri-Tech, because we are innovators. But we need the farmer engagements, and we need the big banks to give us money to do that. So this kind of, collaborative approach, starting from the bank, going all the way up to the borrower or the farmer, is the best way. India will do better there, because we have numbers. If it is not China, it has to be India for the millions of people. We have identified 300 million, including the dairy farmers. 120 are under PM Kisan benefit, and they're marginal small farmers. And big ones are just about 10-15%. But 85% are the marginal small farmers. You have to bring that small family of farmer to change their behavior.
Perfect. Some very, very important thoughts. I think just to summarize, I think some of the themes that I take away from today's session, I think the common word that's coming across is collaboration. So there has to be collaboration across the entire supply chain. There's huge opportunity for improvement and innovation across the supply chain. That's something that Kshitij, of course, mentioned, the use of IoTs. And then how do we link the farmer at the end of the chain, the small farmer, all the way to the banks? How does finance reach that small farmer? That is the most significant element. Well, I've had an engaging session. I really, really appreciate everyone's time today. Thank you so much for sparing some time today. And I think this was a very, very useful session and a very, very pertinent topic, especially on a green finance and agri kind of a theme. So thank you once again. And until next time, it's bye for now. Thank you. Thank you so much.
Thank you, guys. Thank you.
Thanks
Thank
for
you.
making it.
Bye-bye. Bye-bye.